With inflation cooling, the Reserve Bank is signalling rate cuts, but what will cheaper money mean for households and the broader economy? For more, I'm joined by Dr Steve Enticott from CIA Tax. As always, it's good to have you in the studio. What's your take on the RBA's current rate cut strategy? We're in mid-2025. Are they right on time or are they falling behind?
Yeah, it's a good question, isn't it? It's a vexed question, I think, interest rates. Because when someone comes to me and says they're cutting rates, how good is it? Our mortgages are going to be cheaper or whatever. But then as an accountant, I go, the reason they're cutting rates is because the economy is not good. So, it's a bit of it's good from an immediate point of view. But if you take a macroeconomics point of view, it's actually a bad thing that they're reducing rates. They're reducing rates because the economy is struggling, because there is no private investment, public investments run out of money. So we're really trying to, involve the private sector in increasing their borrowings and investing back in Australia. Rules and regulations are a whole new thing. But from an economic point of view, the reason they're cutting those rates is because there's a reason. Yeah. So don't get too excited. It's actually, the reason is we're going bad.
Yes, correct.
If we were going, hit, really. That's right. And if we're going good and they're putting interest rates up, we're going too good. So they put up the interest rate. So it's trying to find that spot in between. So if you're seeing rapid rises in interest rates, we're doing really good, and there's a bit of a bubble happening, and we've got to calm that bubble. Falling interest rates means, hey, we've calmed that bubble too much. Now we've got to go back the other way. So I feel manipulated, Mike. I feel
really?
Yeah, I do. I think RBA banks, in a way, mess with our minds. That is part of their philosophy. Yeah. It's like, oh well, if we cut interest rates, those sensitive areas of the economy will respond. If we tighten them up, well, they'll respond the other way too. So it feels like they are in control of us.
Yeah, very much pulling the tether.
That's right. So we've got to look at it and go, what's the most sensitive thing? And I'll put it to you, Mike, if they cut interest rates, what's the first thing that people get excited about and react to?
More money in my bank account.
Yeah, if you're a mortgage payer, your mortgage repayment has come down. Now, you may not have been able to afford that mortgage payment with interest rates running up, but now it's a little bit cheaper. So you feel a little better. And humans as a whole, if we feel a little bit better, we'll go spend in other areas. We'll go buy that coffee, we'll go buy that avocado on toast or whatever it might want to be, instead of not buying it with interest rates rising and rising and rising. So that's what they're trying to do. They reduce the rates. Mortgage holders are the biggest sensitive group because now they can afford their mortgages. They may have some spending, travel money, whatever it might be. But we've also got to look at it from the other side. Okay. We've got the retiree. As soon as people get into their 70s, advisors and accountants and all the like say you've got to detune your risk. Right. All right. So generally that means we increase their cash component of their investments. So if they were sitting on a 5%, 5.5% simple, easy term deposit coming in, they were doing pretty good. They were happy with that. Historically, interest rates have been a lot higher in Australia, but I don't think we'll ever see more than 3, 4, 5, 6% ever again, because we're so indebted. You might remember, Mike, we had that interview a few years ago where I said they'll never go too high again because they can't. But that group, that retiree group, that group that's reliant on the interest on their savings, they're the ones that start to pull back a bit. So they don't get as free with their income. Governments are also looking at that in a different way, going, well, we'll tax them. If they're sitting on too much money, we'll start. That's right. We'll start hitting them. That's right. So, so we're going to see significant movements around interest rates. Now, the group we haven't spoken about, is the group we really want to speak about, is business. Yeah. So if you take a historical look at Australia over the last 5, 10 years, private investment has really plummeted. So private investment in productive activities is not really there. We've bolstered it with tax incentives, instant asset write-offs. We've done everything we possibly can to get businesses to do more investment in Australia. Of course. The reality is it's a lot more complicated than just economic. There's a whole heap of other social and regulatory issues that are stopping that. So the gap has been filled, if you like, by governments who went out and borrowed lots, especially in that post-COVID period and during COVID, and have invested. So that gave us an artificial look at the economy. The economy was going pretty well because governments were borrowing and pumping money into it. Businesses weren't. So now we're getting these interest rate cuts. They're really saying to business, money's cheap. All right, money's cheap. And it is. As a right-wing, head-kicking capitalistic pig, albeit one with a heart, But I look at it and I go, crikey, I can get money at 3, 4, 5%. That's cheap money. If I can't make profit on 3, 4, 5% borrowings, then I'm doing something wrong. So businesses will start to change their mindset, and this is what I'm getting a little bit excited about. 5 years ago we had 0.1% RBA rate. Businesses were borrowing like there was no tomorrow because you're paying 2% interest on your loan. This is what we need. We need these interest rate cuts, not for the pensioners or the retirees who are going to miss out, not for the mortgage holders who are already squeezed anyway with the cost of living, but to get business investment moving. Now, if they make interest rates and borrowing rates lower and lower and lower, it's only a matter of time before the capitalists amongst us go, we need to invest, the economy needs business investings, the government's out of money. So I'm excited.
Absolutely. It's interesting times ahead, but as always, it's good to speak to you on the program.
Thanks, Mike.
And a reminder that the information provided in this segment is, of course, for informative